Right, stay tuned to Morning Live. We're trying to get on the line some of the family members or an organisation representing the Family Members for Life, Azar Jammine, to get their reaction to that DA billboard. So don't go anywhere. It'll be interesting to hear whether or not they are happy with the names of their family members being displayed on the billboard or not. That's coming up. But right now, let's talk about some financial issues. And members of the Monetary Policy Committee, that's the MPC of the South African Reserve Bank, will conclude their meeting today and decide on interest rates. Their main task is to keep inflation in the middle of the 3 to 6% target range. In November last year, you may remember, I'm sure you do remember, that the MPC increased interest rates by 25 basis points and the prime lending rate was at 6.75% and 10.25% respectively. Also, with regard to the independence of the Reserve Bank, President Cyril Ramaphosa assured that it is sacrosanct. Well, to discuss this, we're joined in studio by Dr. Azar Jammine, who is the Chief Economist at Econometrix. Always good to see you. Thanks for coming in.
Thank you. Thank you very much.
So let's start off with interest rates. I mean, many believing they're going to remain stable, unchanged. Do you believe that?
I think it's highly probable that that will be the case. You know, after the last increase in November, there were those who said, at the time it took people by surprise because a lot of the factors were pointing towards reduced inflationary pressures, and people said, why increase interest rates? There can only be one reason, and that's that the Reserve Bank is determined. They're not looking at 3 to 6% anymore. They're really targeting 4.5%, the middle. And that means that, and it's just not coming down there, therefore they're increasing rates, and therefore we're likely to see further rate increases. But you know, oil prices have fallen so significantly. We've seen fuel prices tumbling by 3 rand a litre, and the rand has strengthened. There is therefore, you know, it's going to be very difficult to try and persuade people that inflationary pressures are increasing at the moment.
Okay.
There's also a tendency in the United States for the US central bank to pull back from increasing interest rates, and that helps us avoid having to increase interest rates here as well.
For now, because we've been warned by the Reserve Bank that they, our governor has said that until 2020, they expect to have another 25 basis point increases at least. Do you think that's still the outlook?
Well, that is what their model says. They've been astute. They haven't said that they expect rates to rise 3 times. They've just said their model suggests that the rates should rise 3 times. But they've also said we're not entirely beholden to that model. So I think one has to be a little careful. I think there is a chance of of rate hike during the course of the year. There are a couple of new things that have cropped up that are worrisome. The first that will be sorted out fairly shortly, and that is Eskom has requested 15% tariff hikes for each of the next 3 years. That would add 0.5% to inflation over the next 3 years. The second is that there have been drought conditions in the Free State and the Northwest, and the maize crop looks very parlous for the coming year, and maize prices have shot up by over 50% from the lows that were seen some months ago. So food inflation may start turning upwards as well.
Okay. World Economic Forum happening now, and I bring this up because I remember very clearly last year our President Cyril Ramaphosa going on a charm campaign of note and coming back with a lot of investment. It's an election here in South Africa, and I suppose it's a good time now to look into the year and hopefully into your crystal ball and kind of see what does it look like going forward. I mean, how do you think our economy is going to fare? And would foreign investors want to come in during this time when we are about to go into elections?
Well, it's spot on. Unfortunately, it looks like it's going to be more of the same because the main way in which you can get economic growth going is for foreign investors to come into the country. But they keep being dangled these unsavory issues such as land expropriation without compensation, such as nationalization of the Reserve Bank, such as imposition of prescribed asset requirements. These are issues that were brought up in the ANC election manifesto, and although the president himself is clearly not in favor of the introduction of a lot of these things, he had to accede to it being incorporated into the election manifesto. So foreign investors have this niggly feeling of uncertainty regarding what is what the real agenda really is.
Yeah, I mean, I'm busy reading now exactly what the finance minister was saying, and he gave those 10 reasons as to why to invest in South Africa ahead of the World Economic Forum, some including a diversified economy, a young labor force, advanced financial services and banking sector. I mean, do you think that's enough to attract investors?
It's enough not to dissuade them too much, but it's not enough to see the kind of investment that we really, really need.
Yeah.
And if we were to get that investment, you've got a game changer. This economy can fly. But, unfortunately, the ANC split into factions, and ideologically as well. Those that want populist measures to be taken and those who want investor-friendly policies to be implemented. And the president is trying to keep the peace by kind of acceding to both sides. But that's not the solution that's going to attract investment.
Needs to pick a side. Quickly, Azar, and finally, we need to talk on the Reserve Bank. You mentioned that, but President Cyril Ramaphosa saying there are absolutely no plans. I'm not sure our finance minister agrees with him about the nationalisation of the Reserve Bank. What do you believe?
The nationalisation of a Reserve Bank is a red herring. South Africa is only one of 7 countries with central banks that are not entirely owned by the government. As long as the mandate in the Constitution says that the Reserve Bank must be independent, it will be independent. The fact that 10% of the shares of the Reserve Bank are held in private hands is neither here nor there. It really doesn't have play a big issue. It's a historical legacy factor, and it would cost 200 million rand to buy them out, and nothing would change. Okay. What would change things is if the mandate of the Reserve Bank were to be altered.
All right, we leave it there. Azar Jammine, as always, thank you very, very much for talking to us here on the program. So, interest rate decision this afternoon, and many economists, as well as Dr. Azar Jammine, believing they will remain unchanged. He, of course, is the Chief Economist at Econometrix. Off to Kenya we go. Sakina, let's